So today we'll start with average clause concept of insurance claim, right? So what do you mean by average clause? In order to discourage underinsurance, what do you mean by underinsurance? First of all, we must understand what do you mean by underinsurance. Underinsurance refers to presume that the organization which is going to take insurance policy of stock, right? So the organization would be knowing that what is the regular quantity of stock will be maintained in the organization. So what the company has to do, company has to take the full policy of the stock. Suppose, let's say there would be averagely there would be a stock of, let's say, 1 lakh rupees in the godown or factory or the shop premises or whatever it may be. So what the company has to do, company has to take the total 1 lakh worth of policy by paying the insurance premium. But what the companies will do, companies will try to reduce the insurance premium burden by taking a less amount of policy. So they will take a policy, let's say he has taken a policy of only 60,000. Though he is maintaining the stock worth rupees 1 lakh in the organization, he has taken a policy of how much? Only 60,000. So taking a policy less than the amount which will be maintained in the godown or factory or shop is called as underinsurance. We are not taking the complete insurance of the stock. So we are taking only less amount of stock insurance. Hence, this concept is called underinsurance. So what is happening here? In order to discourage this kind of an underinsurance, usually the average clause is inserted in all the contracts of fire insurance. So one clause of the insurance contract will be inserted called as average clause. What this average clause is actually refers to. Here, the companies will pay the insurance claim proportionately to the policy taken. Suppose in this case, what has happened? 1 lakh worth of material lies in the godown every time, but that fellow has taken only policy of how much? 60,000. Presume that out of 1 lakh rupees worth of material, one fine day fire broke out in the company, in the organization. The material worth rupees 50,000 has been lost due to fire. How much lost? 50,000. Then how much claim will be given by the company, insurance company? Do the insurance company pay total 50,000 worth of rupees of claim? The policy amount is 60,000, stock was there 1 lakh, out of 1 lakh stock, 50,000 has been destroyed by fire. Then how much claim the business has to get from insurance company? That is the question arises here. Because the contract of the insurance contains an average clause, then what will happen? This is the treatment, this is the concept of underinsurance here. So what the company, insurance company will do? Insurance company will give the proportionate amount of claim. What is that proportionate amount of claim? The claim is out of 1 lakh worth of stock, he has taken insurance for only 60,000. Therefore, how much insurance he has booked? Only 60% of the material he has insured. So whatever material has been destroyed, of which only 60% will be given. That is 30,000 will be given as claim out of 50,000. So this is what we are doing under the average clause. What we are doing, we were reducing the claim proportionately. Why we are doing? To discourage underinsurance, right? So the object of inserting such a clause is to limit the liability of the insurance company to that portion of the actual loss, to the extent of policy value. Actual loss, whatever incurred, will be paid by the insurance company, not more than that. In my earlier example, it will pay only 30,000. Why 30,000? How you got 30,000? That is 50,000 into 60%, right? So proportionately, the value of claim will be reduced, right? That proportion of the actual loss. which the insured amount bears to the actual value of stock. So this is the actual concept of average clause, right? So we will understand how to calculate the value of claim under average clause. The value of claim is calculated under average clause is equals to the formula value of stock destroyed into value of insurance policy divided by value of stock on the date of fire. The same formula I have applied in my example. Value of stock destroyed is how much? 50,000. Policy value is 60,000. Stock in the go down 1 lakh. So 60%, that's the reason why I got the value of 30,000. So like this, we will calculate the value of claim. But the question will provide the value of insurance policy. We will prepare memorandum of trading account and we will calculate the value of closing stock on the date of fire. But how to calculate the value of stock destroyed by fire? So calculation of value of stock destroyed, how to calculate? Formula will be closing stock minus scrap, salvage or saved. The same thing what we understood earlier, but here we are considering it as a value of stock destroyed. What is the amount of value of stock has been lost by fire? That we will calculate how? The closing stock, what was there in the go down, minus scrap value, salvage value or saved value. That we reduce, the leftover figure is called as value of stock destroyed. So like this, we need to calculate the value of stock destroyed. Once we calculate value of stock destroyed, we will apply the formula and we can get the answer. So we'll take up one illustration. With the help of this, we wanted to understand one question. If you see the illustration, what is said, fire broke out in Pooja Limited and closing stock value on the date of fire rupees 80,000. So what was the value of material lies in the go down on the date of fire? It was 80,000. Stock saved was rupees 44,000. Out of 80,000, we have saved already 44,000 worth of material. Policy was taken for only 60,000. See, we are maintaining a stock of 80,000, but we have taken policy of only 60,000. So this is called as underinsurance, which contains an average clause. So policy contains a clause called as average clause. Calculate the value of claim. How to calculate the value of claim? So 80,000 worth of material was there in the go down when the fire broke out, and stock was saved 44,000, and the policy was taken for 60,000. Right? Clear. So in this case, how to calculate the value of claim? See, you cannot directly say that, sir, 80,000 material worth of material is already there in the go down. We saved 44,000. So resultant figure is how much? 36,000. The value of claim. It is not possible because it is an underinsurance concept and there is a clause of average. Clause is there already in the agreement. Hence, in such a case, we need to apply the formula. Therefore, solution under that value of claim. How to calculate the value of claim? Same formula we had. Value of claim is equals to value of stock destroyed into value of insurance policy, value of stock on the date of fire. So in the question, when you see the formula, the content of the formula, 3 items, 3 variables we require to calculate the value of claim. So of this value of insurance policy already given in the question, that is 60,000 is the value of insurance policy. Value of stock on the date of fire is also given 80,000 in the question. So we just require what? Value of stock destroyed. Then we will take one values. So we have value of insurance policy 60,000 with us. So numerator will be 60,000. Then we take denominator 80,000. That is value of stock on the date of fire. This fraction should be multiplied with the value called as value of stock destroyed. So we don't have value of stock destroyed. So how to calculate the value of stock destroyed? Value of stock destroyed is equals to, we need to apply the formula value of stock destroyed is equals to the formula closing stock 80,000 we had in the organization on the date of fire, of which we saved 44,000 worth of material. So 80 minus 44, 36,000. Therefore, our value of stock destroyed is how much? 36,000. So 36,000 into 60 divided by 80 is equals to, the claims should be 27,000 will be received from the insurance company. Clear? So like this, we need to calculate the value of claim, right, under which clause? Average clause concept, right? This is a basic question. This kind of a question will be asked for 4 marks and 5 marks, right? So bear in mind and understand the formula. Now we'll take up the long question, that is 9th question. So what this 9th question says: a fire occurred in the premises of Amir Chand on 10th April 2004 and the considerable part of the stock was destroyed. The stock was salvaged was rupees 50,000. A insurance policy containing an average clause was taken for 3,60,000, right? So we have taken a policy worth rupees only 3,60,000, which contains a clause called as average clause, right? Then cover the loss of stock by fire. You are required to ascertain the amount to be claimed from the insurance company. And you have provided further information: purchases for the year 2003, before the 1 year before the date of fire, right? So this is this 2003 information pertaining to trading account. So purchases for 2003, sales for 2003, stock on 1st January 2003, that is opening stock 2,70,000, purchases 15 lakhs, sales 25 lakhs, opening stock is 2,70,000 for the trading account 2003 it is. Stock of 31st December 2003, that is closing stock. Wages paid during the year 2003, wages amounted to 7,30,000 paid during the year. Then purchases from 1st Jan 2004 to till the date of fire, that is 10th April 2004. In the sense, next financial year information. 6,60,000 sales till the date of fire, 10 lakhs wages paid till the date of fire, 1,50,000. So this information we have provided. Fire had broken on 25th December 2003. One more information, one more fire might have broken in the last financial year, that is 25th December 2003 itself. But we are calculating the claim to be lodged with the fire broke out on 10th April. So this is the last year some information. Last year also some material might have been lost due to fire. So 2003 and had destroyed the stock is estimated 90,000. This is the last year. We are preparing for the current year, that is 10th. So this transaction of 90,000 pertaining to which financial year? It is pertaining to 2003 and trading account information. There was a practice in the concern to value the stock at cost less 10%. So they were valuing stock at cost less 10%. But the practice was changed from which date? 31st December 2003. In the sense, trading account itself was valued at cost plus 10%. In the sense what? Opening stock was valued at cost less 10%, but closing stock valued at cost plus 10%. So what we have to do, we should bring down or brought it up to cost for our conveniency of calculation of value of claim. So first of all, gross profit percentage is not given. Therefore, what we need to prepare? We need to prepare under solution. First, we need to prepare trading account. Trading account of Amir Chand for the year ended 31st December 2003. Sorry, it is a third it has printed. 31st December 2003, that is. Then opening stock. What is the value of opening stock? Opening stock value is 2,70,000 if you observe your. Opening stock is 2,70,000. But we had a practice of calculating cost less 10%. So we need to convert it to cost. How to convert? That is 2,70,000. Always said numerator will remain 100. Divided by 100 minus rate. It is cost less, no? Therefore 90 I have taken. So 2,70,000 into 100 by 90 I'll get 3 lakhs as our opening stock. Clear? Now we'll proceed with the purchases. This is the value of purchases directly given in the question, that is 15 lakhs. Then we'll go to the wages. To wages paid. How much wages paid? Directly given in the question, wages paid 2003, 7,30,000. Next item will be by sales, value of sales. How much sales we made during the financial year 2003, that is 25 lakhs is the total amount of sales, right? Directly given in the question. Then by closing stock. Closing stock. When we come to the closing stock, closing stock was valued, practice was changed, and it was calculated at cost plus 10% here. So the formula is calculation of closing stock. The value of closing stock 4,84,000 into 100 divided by 110. When it is cost price, rate divided by 100 plus rate formula. Then what is the value of closing stock we are getting? 4,40,000 is the value of closing stock. So once we calculate closing stock, then we close the ledger account, right? Sorry, one more item here. We forgot to take up. See, on 25th December 2003, had destroyed, that is 90,000 material has been destroyed. Whenever the loss incurred through sale, through fire or any kind of a theft or whatever it may be, that material should be credited to trading account. So that's the reason by stock destroyed by fire, 90,000 is credited, right? So we are calculating for on which date fire that took place on 20th, right? We're not calculating for this situation is already over. But for the calculation of gross profit, we are doing this and we are considering here. Right? So 90,000 will be credited. Then make the summation, both the side 30,30,000 we are getting. Sorry, credit side we are getting. We have written both the side the same value. Then we found out the value of gross profit. That is how much? 5 lakh. That is our balancing figure. So like this, we calculated our value of what? Gross profit. Once we calculated the value of gross profit, next step is what? You need to calculate the gross profit percentage. How to calculate gross profit percentage? The formula is gross profit percentage is equals to gross profit by sales into 100. This formula we are discussing in the earlier question even, right? So apply the formula and get the gross profit percentage. So gross profit percentage comes to 20%. How? Total gross profit we earn 5 lakhs divided by total sales are 25 lakhs into 100, that comes to 20%. So like this, with the help of this question, first we calculated the value of gross profit, calculated the percentage of gross profit, right? With the help of preparation of a trading account. One new item is what? Two new items. One is we were having a policy of cost less 10% in the beginning. It has been changed to cost plus 10%. As per the statement in the question, we have adjusted the value. We found out the opening stock and closing stock. Besides that, one more item is fire broke out in the trading account also. In the information pertaining to last year, 25 December 2003, amounted to 90,000 material has been destroyed. That even a new item that is considered on the credit side of the trading account, right? These are the new item. Then rest of the things are as usual. Once this is done, next is what? I am carrying two information. One is question as well as the percentage. 20% is also I am carrying from the last slide, right? Which will be used as a basis for further calculation. Once it is done, what is our next step here? Our memorandum of trading account. What we need to prepare? Memorandum of trading account. We will start preparation of memorandum of trading account. So we will consider first to opening stock. Opening stock given in the question. Sorry, opening stock will be the closing stock of last financial year. That is, when we prepared trading account, what was our closing stock? Same value we will see the closing stock. The trading account, we had the closing stock 4,40,000. This value we will consider as our opening stock in the memorandum of trading account, right? So to opening stock again 4,40,000 we have taken, right, as our opening stock because it is last year's closing stock. Next, purchases information 6,60,000 is directly given that I have posted here. Then to wages information is already given in the question 1,50,000 that I have posted here. By sales is also given in the question, that is 10 lakhs posted here. Then next and most important is gross profit. So we calculate percentage how much here? We calculated 20%. This will be applied on sales to calculate the gross profit. Therefore, 10 lakhs into 20% 2 lakhs will be our gross profit. So 10 lakhs into 20% will be 2 lakhs will be our gross profit. Once we calculate gross profit, then what we will do, we will close the ledger account. Whichever side is more, we will write both the sides same value. That is, debit side is more, 14,50,000 recorded on the both the side. Then we calculated the value of closing stock amounted to rupees 4,50,000. How much? 4,50,000 as a balancing figure. We calculated it as a balancing figure. Once we calculated the value of closing stock as balancing figure, now what is our focus would be? Our focus would be on calculation of what? Value of claim. As the question says that the value of insurance policy amount is given in the question. How much value of insurance policy amount? The insurance policy contains an average clause was taken for 3,60,000. Though we have material worth rupees 4,50,000, we have taken a policy of only 3,60,000. Right? So it is an average clause concept. Now we need to calculate the value of claim. How to calculate the value of claim? Whenever there is an average clause, value of claim is equals to, we need to apply the formula. What is the formula? Formula is, just now we understood in the earlier question even, that is value of stock destroyed into value of insurance policy divided by value of stock on the date of fire which lies in the godown. Right? So like this we need to calculate. So in order to calculate this, what are the items we require? We require primarily value of insurance policy. This directly is given in the question, that amounts to 3,60,000 is the value of insurance policy. Then value of stock on the date of fire, just we calculated through memorandum of value of insurance policy, that is 4,50,000. But still what we need to have value of stock destroyed. Unless and until we have this value, we cannot apply the formula and get the answer. Therefore, first our priority would be calculation of value of stock destroyed. How to calculate this value of stock destroyed? Value of stock destroyed will be calculated through closing stock minus stock saved, salvage or scrap. So in this question, he has directly stated that value of stock saved, right, amounted to rupees 50,000, directly given in the question. Second line itself, if you observe here, the stock was salvaged, sorry, not saved, salvaged, amounted to rupees 50,000. So out of the total stock of 4,50,000 which was there in the godown on the date of fire, we deduct 50,000. So resultant figure comes to 4,50,000. What is this 4,50,000? That is value of stock destroyed by fire. Right? Then we know all the values. That is value of insurance policy is 3,60,000, value of closing stock 4,50,000, and value of stock destroyed is 4 lakhs. Apply the formula and get the answer. You apply the formula, 4 lakhs into 3,60,000 divided by 4,50,000. Then is equals to value of claim would be 3,20,000. Clear? So in this way, we need to calculate the concept of average clause problems. Right? So this is the most important